Good evening. Tonight, we're tracking a story with profound implications for the global economy and America's place in the world. Deep within Tokyo's financial centers, a quiet but significant shift is underway. Japan is embracing the Chinese yuan. This isn't just a minor adjustment. It's a tremor in the foundation of a system dominated by the US dollar for nearly 80 years. The question, is the dollar's long reign in jeopardy? For decades, the dollar has been king, used for global trade, a safe haven, and the bedrock of international finance. But as of late 2025, Japan is diversifying its currency reserves and facilitating more trade in yuan. This move signals a pragmatic response to China's growing economic gravity and forces us to confront the shifting sands of global power. Japan is helping pave a new expressway to Beijing, allowing traffic to flow in yuan, a significant alternative route that changes the global map. Tonight, we'll break down what's happening, why it matters, and what it could mean for the future. To understand Japan's recent actions, we need to look back at how the US dollar became the world's financial heavyweight. After World War II, the Bretton Woods Agreement pegged the dollar to gold, making it the world's reserve currency. Even after the US left the gold standard in 1971, the dollar's dominance persisted, thanks to America's vast economy and stability. Japan's post-war economic miracle thrived under the US economic umbrella, with exports to America conducted in dollars. The Bank of Japan accumulated vast reserves of US dollars and treasury bonds, seeing them as the safest assets. This deep reliance on the dollar became part of Japan's economic DNA. Think of the dollar as the world's financial operating system. Japan's banks, corporations, and policies were all designed to be compatible. This arrangement provided stability, but also created vulnerabilities. Japan's economy became highly sensitive to dollar fluctuations and US monetary policy. A strong dollar hurt Japanese exports. A weak dollar eroded Japan's savings. What was once a source of strength is now seen as a strategic liability in a world where economic power is shifting. Japan is rethinking its dependence as a new giant rises across the sea. To grasp Japan's caution, we must revisit the Plaza Accord of 1985. The US, facing a trade deficit and a soaring dollar, joined with Japan and others to devalue the dollar. The yen's value doubled in 2 years, devastating Japan's export-heavy economy. In response, Japan slashed interest rates, fueling a massive bubble in stocks and real estate. The inevitable crash led to the lost decade, a period of stagnation that haunts Japan to this day. The Plaza Accord is a powerful reminder. Decisions made in Washington can have seismic consequences for Japan. This history fuels Tokyo's desire for greater monetary autonomy and diversification away from the US dollar. Every modern policy discussion in Tokyo is shadowed by this memory. Japan's current pivot toward the yuan is a direct response to the painful lessons of the past. The ghost of the Plaza Accord still shapes Japan's currency strategy. Japan's shift is a deliberate evolution, not a sudden revolution. In late 2024, the Bank of Japan and the People's Bank of China expanded a currency swap agreement, promoting the use of yuan and yen in trade. Major Japanese corporations soon began settling more trade in yuan. By mid-2025, yuan-denominated trade between Japan and China had jumped 15% year over year. Japan's foreign currency reserves, over $1.2 trillion, are slowly rebalancing, with a slight decrease in US Treasury holdings and a rise in yuan assets. No one is dumping dollars, but Japan is cautiously hedging for a different future. This is not economic war. It's prudent diversification. Japan is acting like a savvy investor, shifting some assets to yuan as China's influence grows. The message: China's currency is becoming too important to ignore. Why now? The answer is a mix of economics, politics, and shifting global realities. China has been Japan's largest trading partner for over 15 years. Trading in dollars adds costs and risks. Direct yen-yuan exchange is cheaper and more efficient. Politically, global uncertainty and shifting US policies have made countries wary of relying solely on the dollar. For Japan, balancing its US alliance with economic ties to China means financial independence is a strategic imperative. There's also a generational shift. Japan's younger leaders are focused on regional integration and Asia's future. China is actively promoting the yuan, building its own payment systems and signing currency swap deals worldwide. Japan's move gives the yuan a major boost of legitimacy. This pivot is both a response to China's rise and a catalyst for further change. Financial experts agree. This is a significant long-term trend, not a sudden collapse of the dollar. Dr. Emi Nakamura, economist at UC Berkeley, suggests this is a natural evolution as the world becomes more multipolar. The dollar's dominance was a feature of a unipolar world. Now, more countries are learning to speak yuan. Japan's move is like a major institution becoming bilingual, recognizing that fluency in yuan is now essential. Ray Dalio, founder of Bridgewater Associates, sees Japan's actions as classic hedging, diversifying away from a single currency. The dollar's deep markets and legal systems still give it an edge, but the direction is clear. We're moving from one dominant reserve currency to several. The dollar will likely remain first among equals, but it will have to share the stage. Japan's pivot is a symptom of a broader shift, not the cause. The world's financial system is evolving. This financial shift in Tokyo could have real consequences for American households. The US has long benefited from foreign demand for dollars and treasury bonds, keeping interest rates low. If countries like Japan buy fewer US bonds, demand drops and interest rates could rise. That means more expensive mortgages, car loans, and borrowing costs for businesses. A weaker dollar would make imports pricier, electronics, clothing, cars, but could boost US exports and manufacturing jobs. It's a double-edged sword, creating both winners and losers. For now, these effects will be gradual. The global financial system is like an ocean liner. It turns slowly, but the direction is changing. The era of uniquely cheap borrowing may be ending. Decisions in Japan today will shape the economic environment for American families for years to come. Washington and Beijing have responded very differently. In Washington, the official line is calm. The dollar remains strong and stable. Privately, there's concern. Dollar dominance is a cornerstone of US power. US officials are likely urging Japan to stay committed to the dollar, while quietly highlighting the risks of the yuan. The US strategy: reassurance and quiet persuasion, not confrontation. In Beijing, the mood is quietly triumphant. Promoting the yuan's international use is a core Chinese goal. Japan's embrace of the yuan, even partially, is a major symbolic victory. Chinese media touts this as a sign of a multipolar world and a fairer monetary system. For China, it's about security and influence, reducing reliance on the dollar and binding Asia closer to Beijing. China knows the yuan won't replace the dollar overnight, but it's building the foundation for a bigger role. The long game is underway. Is the US dollar in trouble? Not immediately. The dollar remains the world's most important currency, but Japan's pivot is a clear sign its dominance is being tested. We're witnessing a shift from a unipolar to a multipolar financial world. Japan's actions are pragmatic, driven by past trauma and China's economic gravity. It's not abandoning the US, but hedging and building new bridges. This is about more than exchange rates. It's about global power shifting. The Bretton Woods era is evolving as new economic powers rise. The journey will be long, but the direction is clear. The world's financial map is being redrawn. This is a moment for awareness, not alarm. The choices made today will shape our shared future in a rapidly changing world.